Welcome back to our crash course on Real Estate 101. In this lesson, we will be discussing real estate markets. As a beginner in the world of real estate, it's essential to understand the factors that affect the real estate market, how to analyze market trends, and identify investment opportunities. By the end of this video, you will have a basic understanding of the real estate market and the skills to start your journey as a real estate investor. 1. Real estate financing and mortgages. Real estate financing is the process of obtaining funding for a property purchase. Mortgages are the most common form of real estate financing. A mortgage is a loan that is secured by a property. In most cases, a down payment is required, and the borrower pays back the loan over time with interest. It's important to understand the different types of mortgages available, such as fixed rate, adjustable rate, and interest-only mortgages. 2. Factors that affect real estate markets. Several factors can influence real estate markets. Some of these factors include interest rates, economic growth, job market, population growth, and supply and demand. For example, when interest rates are low, it becomes easier for people to obtain mortgages, which can lead to an increase in demand for real estate. Economic growth and job market stability can also have a significant impact on the real estate market. Population growth and changes in demographics can affect the demand for certain types of properties. 3. Analyzing real estate market trends and forecasts. Analyzing real estate market trends and forecasts is essential for making informed investment decisions. Understanding market trends, such as price trends, inventory trends, and days on market trends, can help you identify investment opportunities. Forecasts, such as projected changes in interest rates and economic growth, can also help you make informed investment decisions. 4. Identifying key indicators of market strength and weakness. To identify investment opportunities, you must be able to identify key indicators of market strength and weakness. Some of these indicators include price trends, inventory levels, days on market, and the number of new listings. If the market is strong, prices will be increasing, and properties will be selling quickly. If the market is weak, prices will be decreasing, and properties will take longer to sell. Real-world examples. Real-world examples can help you understand how to apply the concepts we've discussed in this lesson. For example, you can analyze current market trends in real estate by looking at real estate data and reports for your local area. You can also study historical trends in real estate markets to gain a better understanding of how the market has changed over time. Activities. To reinforce the concepts we've discussed, try conducting market research on a local real estate market. Develop a chart comparing real estate market trends over time. This will help you gain a better understanding of how the market has changed and identify potential investment opportunities. Discussion questions. What factors influence real estate markets? How can market research be used to identify real estate investment opportunities? In conclusion, real estate markets are an essential concept to understand for anyone interested in real estate investing. By understanding real estate financing and mortgages, the factors that affect real estate markets, analyzing market trends and forecasts, and identifying key indicators of market strength and weakness, you can start your journey as a real estate investor. Remember to conduct market research and always be on the lookout for potential investment opportunities. I hope you found this lesson informative, and stay tuned for our next video in the Real Estate 101 series.